Hi everyone, today let's talk about corporate debt defaults, as well as Goldman Sachs earnings. Then we'll look at all of the usual data and calendars, as well as the charts. And then we'll finish up with my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So corporate debt defaults soared 80% in 2023, and S&P says they could go even higher this year. They say in 2024, we expect further credit deterioration globally and predominantly at the lower end of the rating scale, meaning that companies that already have lower credit ratings are potentially going to see even weaker credit ratings going forward and potentially defaults. And then moving lower here, you can see that 80% came from the 153 companies that defaulted in 2023, up from 85 the year prior, which was that 80% increase. So 153 companies did go bankrupt last year, and they're saying they expect the number to go up once again this year, especially with those higher interest rates. It does make sense. They also mentioned that corporate debt jumped to $13.7 trillion during 2020, an 18% jump, but obviously they were taking advantage of that 0% interest rate, so it's not having a huge impact, at least here in the short term. The question is what comes after they have to refinance that debt, which could take years to materialize, so I wouldn't say this is something to panic about immediately. And we have talked about this in previous videos, where 2025 and 26 is when we start to see some of those debts materializing. You can see they mentioned that here, expected to mature during that period, and then the question is what are those interest rates going to be at during that time? And then you see things like the corporate debt cliff, which is that maturity during those periods where large percentages could be maturing, and then we have to see what happens at that point and how that's going to impact growth in earnings going forward. And I think you can make a good argument that none of that is priced in at this point, especially with the unknowns surrounding Fed rate cuts somewhere around the middle of this year, in my opinion. Moving over to the stock for the day, Goldman Sachs, they topped earnings pretty well. Revenue $11.3 billion versus $10.8 expected. They reported an earnings of $5.48, and they're not sure if that's exactly comparable with the $3.51 expected, but that is what's listed here, so we'll go with it for now, which marks a massive jump in earnings, 51% to $2 billion. They did mention that the bank was weighed down by some loan losses, which were starting to surge. Company-wide revenue rose by 7%. The CEO came out and mentioned that they did make it through a tough year due to capital markets and strategic missteps, but they achieved what they wanted to in 2023, and they have a much stronger platform going into 24. Asset and wealth management jumped by 23%, which is a strong gain for that section of their business. They also saw a jump in platform solutions by 12%, but that was below the estimate of $612 million versus $577 million. And they also continued to do well in their trading division, which offset their misses in fixed income. Trading revenue jumped by 26%, so continuing to do very well in that section. And overall, it seems like Goldman Sachs is on the path for a better company and one of the better performers for this earnings cycle relative to the other banks. Moving over to fear and greed, we did see a tick down here, closed at 70 versus 71, down from 80 a month ago. So we're still seeing this kind of taper. Still looking at kind of a double top here. Recent price action, strength and breadth continue to move lower. Very interesting. Put call ratio still in greed. Saw a nice step up here on volatility. We will look at that closer on the VIX. And then safe haven demand and junk bond demand in greed and extreme greed. So lots of greed across markets, just about the same as it has been. Moving over to seasonality, we just had trading day 10, which was supposed to be basically flat across most markets. And then we start to see a little bit of divergence here. So NASDAQ looking for a rally over the next few days, whereas the Russell, you get one more day of rally, and then we're starting to look for a little bit more dip into the end of the week. We talked about it in the Sunday video. Still looking at that flat to slightly bullish and then dip towards that options expiration. Moving over to Max Pain, still sitting at 460 or about $15 lower than current prices. That is a pretty big red flag for me. Almost 4% lower to Max Pain from current levels. You can see that here, 460. Some decent put walls ahead of there at 465, 470. Call wall is 480. You got some decent calls here at 475, and we continue to hover in that area. There's also a few calls here at 470, which is interesting. Really between 460 and 470 would make sense to me. And both of those levels were quite a bit above them. So total options, 5.1 million, put call ratio 1.85. And right now this still says bearishness to me. Moving over to the charts, starting off with the S&Ps here, you can see we gapped down, rallied back up to that trend line, rejected from there, pulled back to that 200 SMA at 473, and then pulled back almost to the 21 EMA at 475.23. Now we're sitting just barely above my level at 474. This level has been chopped on quite a lot over the last couple of days, so it's not a super important level. It's just something that I'm watching in terms of an area where you could see a reaction. I wouldn't put a lot of emphasis on it right now. More important to me is that trend line up around 476 and then the 200 SMA at 473. And then you can see that on my longer term thesis here. I was looking for a left shoulder head right shoulder, but then we kind of overthrew that right shoulder. Now we're looking at more of a double top, and you can see we are pulling back. Momentum slightly bearish, RSI breaking down from the SMA, volume picking up on that down move. Everything does look a little bit weaker going into tomorrow's session on the S&Ps. Moving over to the NASDAQ, this is a very different thesis here. You can see we did gap down through a pretty big wick to the low, took out Friday's low, which was interesting, all the way down to 406. Then we rallied right up to these previous highs. I do have a short-term level here now at 411. Dipped down to this trend line that we've been watching on the hourly chart, held that level, rallied back up here into the end of the session. Now we're looking at a break of this shorter term downtrend line. So this is going back to the previous high. We have not really closed above it. We did one time here on the first candle of the day and then pretty quickly rejected back below it. So a bunch of wicks to this level. If we can get above that 411 and hold, then I'm going to turn a little bit more bullish here. But with how weak the S&Ps are looking, I don't think we're going to see a significant breakout on the Qs. It is something to watch. It's certainly possible, but usually you don't see a major divergence between the two. It just looks like the NASDAQ is a little bit stronger here in the short term. Moving over to the Russell and the Dow, both of these broke lower here today. The Russell has been looking quite weak, continues to throw wicks, rejected from that 144 EMA, broke below all the SMAs and EMAs on the Friday session. And then once again here today, continues to break lower. Momentum bearish, RSI bearish here on the hourly chart. Took out my 191.89 level. So next level in terms of support is down at 189. Didn't get anywhere near that, and it is starting to hold up a little bit, which is interesting. The low for RSI is going back to Thursday. We've had much higher RSI reads and lower prices, so there's a little bit of divergence there. But price action is king. This is still trending lower. And let's look at that on the daily chart. Does not look great at all. Gap down, fell, closed near its lows. You would expect that to continue lower. Momentum bearish, RSI bearish. And then looking at the Dow here, did gap down, did retest, did sell off, took out 373.74, retesting it here after hours, and it sold off a little bit. And then similarly to the Russell, gap down and fell, closed just below my level. Very, very tight on that level, so something to watch. Maybe we get back above it tomorrow, but this does look not great at all. Gapped through the 9 EMA, gapped through the 21, gapped through VWAP, broke below those, bearish momentum, bearish RSI, strong volume. Not looking great here across the board. Moving over to the equal weighted S&Ps, similar thesis to the others, gapped down and fell. Did touch this lower support line, did find a little bit of support there. Next level for me, 153.19 if that level breaks. We also gapped through this longer term trend line that I've been watching, so that's not great either. Let's look at it on the shorter time frame. Gap down slightly, retested, then moved much, much lower on that first candle, and then sideways chop at my support line. So interesting to see that. Still holding there, so you could actually potentially trade that. But this does look quite bearish. We are below all the EMAs and SMAs on the hourly charts. Momentum, slight peak on volume, but realistically, this looks bearish. Moving over to Goldman Sachs on the weekly chart, you can see we're right at this interesting level, 388.21. Touched it over the last couple days. That is your highs here from 21 November of 22. Pulled back from it a little bit. Still a bullish trend. Momentum fading here slightly. Let's look at it on the daily chart. It does kind of look like some of the other charts we've been seeing. Consolidation at resistance, breaking down from that area below the 9 and 21 EMAs, as well as VWAP. Bearish momentum, bearish RSI. Volume continuing to step up on that down move. Was slightly bullish on the day with their good earnings news, which could prop up the stock a little bit. But in terms of shorter term price action, you can see it's a consolidation at best. You're below the 200 SMA, below the highly traded zone, which is all the way up here at 386.38. Zoom out a little bit to get that consolidation. Still in that same area, 383. Goldman does look quite weak, even with the strong earnings. If you wanted to trade it short term, you could say 375 looks interesting as a level. 21 EMA looks interesting. But realistically, you'd want to see a break of that 200 and then look for a rally to 388. And then if 388 breaks, then you're looking for those all-time highs up around 419, which could be an interesting trade, except for the fact that momentum does look quite weak over the last few days. Moving over to Apple and Tesla. Apple gap down, pretty big bearish day actually, 1.23% even with the midday recovery. So you can see that gap down below my level, 182.37, then rallied back above it to the 144 EMA. So we are below all of the EMAs, still holding that 200 SMA. Momentum basically flat, RSI breaking down, volume not great there. Let's look at it on the shorter time frame just to see. So big gap down, fell, did recover fairly well on that 9 o'clock candle, which was interesting, but this still looks weak to me. Slight bullish momentum, selling off during that bullish momentum, not great. And then looking at Tesla, actually turned a positive day, 0.47% after moving much lower. So it hit our price target. The question is what happens now? You can see the massive gap down. We closed at 218.89. And then we opened here at 215.10, touched my 214 level, overthrew it pretty strongly. The low for the day was 212.18, and then rallied back up and ended up turning slightly positive. So big move down, 264.68, hit that price target, sold off pretty strong down to that 214. Now we've hit our low price target. I would expect probably some kind of bounce, especially with that move that we saw today. It's up a little bit more after hours. Tesla might be finding a little bit of strength, even with the controversy that Elon Musk is saying in the news, asking for more of the company to do AI things. Moving over to Microsoft and NVIDIA. If you're not sure how the NASDAQ is still doing so well, these are the companies why. Microsoft continuing to turn bullish. Look at this massive rally pre-market. Did pull back to the 21, rallied into the close, still bullish. And then you got a massive upgrade here on NVIDIA. Moved from 546 all the way up to 567. And you can see that here. So we did wick that early in the session, pulled back to VWAP, held, rallied into the close. NVIDIA continues to be absolutely relentless to the upside. Price targets I saw today were up around $660 or another $100 from these levels. So absolutely massive, and that is driving the NASDAQ higher. Moving over to staples and discretionary. Staples continues to hold at these levels. I thought we might have broken out with that island that we saw on the Friday session. Then we sold off here today. 0.55%, momentum basically zero, but slightly bearish. RSI breaking below the SMA. And we've been in this zone for a couple of days now. So basically all year we've been in this same area between $72 and $73. Still holding above the 21 EMA and VWAP. So absolutely could hold here. We've seen some pretty decent pullbacks on this rally, and then we've continued to go higher, but definitely stagnating a little bit. And then we saw discretionaries gap down and rally similar to Tesla, continues to be driven by Tesla. And it is actually up a little bit more after hours after touching the 9 EMA and then pulling back, which is currently trading at 174.35. Let's look at that on the hourly chart. Kind of interesting, slightly higher low from this previous low at $72. It's back above the 9 EMA on the hourly chart as well as VWAP, looking for a little bit of rally there. We said Tesla might rally. With that, discretionary should rally. If it gets back above 174.76, could be worth trading. But right now, kind of holding a higher low, potentially just a shorter term bounce. Moving over to energy and oil and gas. These absolutely cratered here today. So oil and gas down 3%, right back to these lows here from mid-December. Similarly on energy, 2.38%, right back to these previous lows from 12 December. Right to that support level at 80.63. It's going to hold, really needs to do it now. I did close my shares on energy. I still took some losses, but not all of the losses. And I did keep my calls on and roll those down to try to take a little bit more profit on the call side to help protect some of those losses. If this breaks here, next level for me, 78.46. Similarly here on oil and gas, next level for me, 24.13. Do have a little bit of a trend line here, which could be interesting. See if that holds. But right now, energy and oil and gas, massive bear day, and you don't want to buy into that. Wait till you see a little bit more structure. Moving over to breadth on the 20 and 50-day averages, you can see it moved much lower on both charts, especially on a closing basis. 20-day breadth tagged that 3660 level. I would expect it to break this at this point, especially with the price action we're seeing. Saw the wick rejection, saw the retest, broke down, followed through to the downside. Looking for a move down to that 16 area, then we'll see what happens from there. And then looking at this 50-day average, finally seeing the bigger moves to the downside that I have been talking about for a long time. Significant move, 5 days in a row of bearishness, touched that 76.46 level. Next one for me is the 55 down at 70.89 and then 68.66. We'll see what happens there. Momentum bearish, RSI definitely bearish on the 50-day average. And then look at this on the weekly chart. We have broken well out of that area. We talked about it. We ended up with 1, 2, 3, 4 weeks in that area. Then we had a breakdown, close below it. Then we've had another one, momentum rolling over, RSI, critical point right at the SMA. If it breaks through that like it did here, then we should see a significant move down. And you can see what that price action looked like, many weeks of bearishness following that initial break of the SMA. So something to keep in mind, certainly something that could happen at this current level. Moving over to yields, both of these had a pretty strong day. So 2-year yield rallied 1.87%. Got very close to 4.25, touched it, pulled back slightly, 4.22 here right now. And then looking at the 10-year, big rally, 2.78. Got back to the 200 SMA, above 4%, 4.05 right now. Momentum bullish, RSI bullish. Does look like we're headed back towards that reversion. We are so close at this point, 0.17% off of each other. Seems like the 2-year is going to continue to hold in this downtrend. It is continuing to downtrend. And then looking at the 10-year, holding a higher low at that 21, rallying up. I would expect it to break out here, probably up to that 55, closer to 4.2. And then we'll see that 2-year kind of fall a little bit. And that's what I'm looking for. And I do think that's going to be quite bearish for equities. Moving over to the dollar, got a massive rally on the dollar, gapped up and rallied super strong up to 103.33. Took out my level at 102.98. You can see we got very close to that 200 SMA on the daily chart. We're in this consolidation for a lot of days in a row. Then we had a pretty clean close on that Monday session. Of course, the dollar was open on Monday. Currencies were not closed. So pretty strong rally there. And then here on the day, really strong. Closed very close to the highs, closed right at the 55 EMA at 103.32. Bullish momentum, bullish RSI. Moving over to JNK and TLT. Both of these broke down as you would expect with yields going higher. JNK, island reversal, gapped up. Doji, gap down, broke these trends, broke some EMAs, bearish momentum, RSI breaking down below the SMA, and then looking at TLT, big gap down, held this trend line, which is interesting. Momentum bearish, RSI bearish. I still would expect this to continue lower, probably down to the 55 EMA, down at 93.12. We've been talking about this looking quite bearish for a while. Held fairly well at the 200 and then big breakdown here. So right now, bearish on both of these. Moving over to volatility, both of these perked up quite strongly. We talked about this previous low, going back to the low here from 1 September. Interesting point, rallied up. Continued to rally back into these previous zones on the move index. VIX, massive gap up all the way to these trend lines at 14.14. So right now, looks bullish here. We did see a massive gap up, held above these trend lines. Momentum bullish, RSI bullish. I would expect the VIX to go a little bit higher. Let's look at that on the daily chart. So we're right at these previous highs. Next level, 14.19. Let's go ahead and extend these trend lines out. Right in that 200 SMA area at 15.50. At this point, that's where I would look for a price target. Bullish momentum on the daily. Everything looks like it's going to peak up here, which does fit with the rest of my thesis. Moving over to my accounts, I did lose a little bit of money. Not great. 113,955. You can see IWM did lose a little bit. I'm still protected here, but I have to wait 17 days for those to expire. So still collecting that $700 on that position. And then XLE, you can see I did close those share positions on that move down, got stopped out of that. And then I bought a call spread. So now I have the 82 call sold for 85 cents and then the 92 call here for $3. So looking to profit 82 cents or $82 on that down move over the next week. If it starts to show strength at current levels, I can always buy some shares to help protect protect myself. We'll see how that plays out. But right now it does look quite weak. And then Q's position, I did roll down and in a little bit, which did hurt me. $3.99, so about $1.50 roll in for $13.96, which puts my max profit at $412.96, or about $3 per share on those two contracts, or $600 of potential upside. I did want to roll in. I do think markets look weak, and I want to protect myself a little bit more and turn that cycle a little bit sooner. So still hovering around this 400 area, and I do think markets are going to move lower. I don't think NVIDIA and Microsoft can hold everything up forever. Let me know down in the comment section what you think of corporate defaults going into 2024 or Goldman Sachs. Are they a good investment right now, or is it a better time to be selling? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.